Welcome everybody to a new analysis of Tradomics. My name is Dario, and in this episode I'm gonna focus on 6 green energy stocks by using our cycle analysis. If you want to know more about our methodology, you can click to Introduction to the T cycle analysis. Why it's important to apply a methodology that is based on cycles rather than technical analysis. The reason is really simple because in such analysis, called quantitative analysis, you have a better understanding of the price evolution because you can statistically predict how long the price can keep falling or rising. And based on the different mm, duration of the cycles, you will have a better understanding. You will be better aware how long the price will follow a certain route. So, in order to give you an idea, if you have landed on this YouTube channel recently, here is what I described it during the last video. We issued on a regular basis videos that are related to different industries, especially focused on US stocks, but not only that. So as a regular procedure, I leave the arrows according to the last analysis that I do. This was specifically done last month, and in the last analysis, I was saying that we were facing the end of a T+2 upward cycle here, and the T+2 upward cycle is a cycle that is encompassed between 24 and 44 days, and this cycle that is connecting tops, one top with another top, is called upward cycle. And such upward cycle was with a duration of 24 days, which was the minimum duration to close a T+2. And when a T+2 or an upward cycle is closed, then another one will begin. And when a new upward cycle begins, the beginning of the cycle starts with a downtrend. And this is what exactly I was highlighting during the last analysis. So we started with a downtrend here, and this downtrend here, compared to the grade of the cycle, needs to abide a certain number of candles of a certain number of days in order to be developed. And actually, what we had was a continuation to the downtrend, and in this case we have one top that was higher compared to the to this top that was done on the 7th of January 2025, and so on. And now we are developing this T+2 cycle. Then we'll need a tail toward the end of the duration to the upside. Now it's important not just to focus on the upward cycles, but definitely on the other flip of the coin, which are the downward cycles. So the downward cycles are connecting lows with other lows. So the analysis was correct. Now I remove all the errors, and as a key message for this analysis on Enphase energy, um, we have to look at what is happening here. So this is a downward cycle, and the duration of this downward cycle so far has arrived at 43 bars. So 43 bars is basically the close to the maximum duration of a T+2, because we have another day in which this T+2 can eventually close, excluding Bayetong. Now we know that there is another day possibility to have a downtrend, and then the 45th candle can be an absolute low, and then starting a new cycle. So we can have another day like this, and then another absolute low, and then beginning of another cycle. So if you see here, if we zoom in, this low is at the beginning of a weekly cycle. A weekly cycle has a duration between 6 and 11 days. And this weekly cycle was, or is still, a negative cycle, because this candle was lower compared to this one, and this candle occurred after 1, 2, 3 days. So if the duration of the cycle is between 6 to 11 days, whenever the candle of a cycle breaks its low, or the low from which it started, or the top from which it started, then the rest of the days will continue to the direction in which the price was broken. So in this case, towards the downside. And this trend can last between 6 to 11 days. So if we now gauge the total duration, we have 7 days. So we know that a weekly cycle can last between 6 to 11 days. But if we take the Matryoshka concept, we know that this cycle is embedded into another cycle that at least is a T plus 2. But this T plus 2 has 2 other days eventually to continue to the downside. So basically, the key message is um, tomorrow's candle will be a candle in which the price could continue to the downside, but then the beginning of next week we should see a reaction. We should see a reaction because the time here to close a T plus 2 will be over. And it's also important to see whether the candle of tomorrow or the beginning of next week will be lower compared to this low. Eventually here we might create the possibility to have a double bottom. But of course we will need another push to the upside, a new arm, let's say, to have the figure completed. Now, if we also take into consideration a wider cycle, in this case, this 6 months downward cycle, this 6 months downward cycle was segmented in the first monthly cycle, the second monthly cycle, and the third monthly cycle here. And the duration of this T plus 4 has been with this absolute low here done on the 18th of November 2024, 98 days. If next week or tomorrow we will go lower this low, then we will have more than 140 bars. 140 bars is still close to the maximum duration, 168 bars. So the key message here is that this yearly cycle is close to the maximum duration. And if we gauge the duration of this yearly cycle, we have a 299 bars. So eventually what they can do is, so be careful. This is the end of the T plus 5. They can eventually put a Beaton to extend the duration until 338 or more, and then the time will be definitely over. So we are approaching the maximum duration of a yearly cycle. We have also the earnings that will be released on the 11th of February 2025. And through this quantitative method, you can today or tomorrow or any point in time calculate statistically how many chances we have to start a reversal trend and how many days we can keep falling. I give you the answer. So the answer is we have 300 days out of 339 days in which the price can return or can have a bounce back to the upside. So we have 30 possibilities, or roughly a little bit more, 39 possibilities out of 339 to continue the downtrend, which is basically today's, it's a little bit more than 10%, 11%. And all the rest of the possibilities will be to the upside. So if you want to purchase the stock, you need to be aware about how many chances you have to today to start a reversal trend rather than keep falling. And the answer is about 10%. This is the beauty of this quantitative method over technical analysis. And we will know already then tomorrow, we will get into an absolute lows before having eventually a bounce back to the upside. The second company in focus is First Solar. So in terms of setup, First Solar is not particularly different compared to Enphase Energy. So in this case, first of all, let's gauge the total duration of this yearly T+5 downward cycle. Here we have 299 days as for Enphase Energy. So basically, we are approaching the maximum duration of a T plus 5. We still have 30 days in which the price can continue to go down, or 39 days, excluding Bayertongs, because Bayertong can eventually prolong the duration of the downtrend. But excluding Bayertong, we have 39 days. 39 days means that the stock can continue to stay in the downtrend from the stop here that was done on the 12th of June 2024 until the 20th of March 2025. So it can go even beyond the earnings release. So that's the first key message. The second key message is that this T plus 4 downward cycle has turned into a negative one since a while. Negative one means that thanks to this bunch of candles, we went lower to this low here without having the minimum time to complete the cycle. And therefore, the rest of the duration of the cycle has been developed to the downside. Of course, this was a trend that was interrupted to a certain extent with this additional cycle, but still here we are going down. So if we gauge now the total duration from this T plus 4 here to this low, we have 60, 67 days. And to this low here, we have 117 days. So given that the time of a T plus 4 maximum duration can be 168 days, then we can definitely go towards the end of the year yearly cycle, as I said, even beyond March and beyond the earnings release with this cycle. So everything is definitely on the same time wave. From this low here to this low here, we have a cycle that can be not just a T plus 1 and T plus 2, but having now a new information from the market compared to the last analysis, here we can put not just a T plus 2, but eventually a T plus 3. So a T plus 3 is a 3-month cycle, in this case downward cycle, that can be that can last um, between 48 to 89 days. So here we have to be really careful, because given that with the candle of yesterday we went lower this low, then the extension of the cycle and the remaining time of the cycle can be to the downtrend. But if we consider the duration, here we have 51 bars. So here we have a T plus 2, and we have the first T plus 2, and this cycle can be either a T plus 2 or a T plus 1. Okay, so here we have definitely all the necessary and sufficient condition to do what? To basically close even this cycle here, and having the condition to have a bounce back to the upside, because we are getting close to the maximum duration of a T plus 5. The only thing that is, let's say, stopping me to say that we're going to have a bounce back to the upside from next week is that we have, from the upward cycle perspective, a situation in which we have a T plus 3 here, and potentially we have closed the second T plus 3 on this top. If we gauge the duration here from this top here to this top here, we have 69 bars, which is median duration of a T plus 3. And if from this top here we have the beginning of a T plus 2, definitely already all the condition, but a T plus 3 or even a T plus 4, because we can also have a T plus 4. Total duration 142 bars, and here we have the condition in which we have enough bars that are closing a T plus 4. We need a T plus 1 positive. Then this push to the downside will last until a month, because we need to have a development of a wider cycle, in this case a T plus 4. So the wider cycle, the more days are required to stay lower than an absolute top. This condition is not there yet, so we have to monitor it over time. But in any case, you have to be aware that we still have time to go to the downside. And as for a phase energy, we can define the beginning of the last weekly cycle here that is already negative, and this cycle, as said, can last between 6 to 11 days. We have reached 7 days, so we are approaching with tomorrow's session 8 days, which is a median duration. But here we have time to continue the downtrend until the beginning of next week. Eventually, the bounce back to the upside can already happen tomorrow with an absolute lows and then back to the upside, but this thing can be prolonged until 11 days, and 11 days means that this condition can be achieved by at most Tuesday 28th of January. So be aware that we can go down until Tuesday 28th of January. This is what I can say for First Solar, and let's jump to the next one. For Nextera Energy, I was saying in the last analysis that from this top here, we could have potentially in extremis climbed for another residual days for a T plus 2 and then back to the downside. This situation has not happened because this was the absolute top, and we further went down. So from this top here that was done on the 3rd of October 2024 until this top, there were 38 days. 38 days out of 44 means that we had at that point in time eventually other 6 days out of 44 to continue the trend to the upside, and the rest possibilities to start a downtrend. So here I was flagging the possibilities, and here you can calculate statistically that it was not a great idea to open long position here, but eventually to open short position, because the probabilities to return in the downtrend were definitely higher compared to the uptrend. Okay, so we went immediately down, and we went down with losing off from the absolute top with a percentage that from this top to its minimum was minus 16%. And now from the absolute top, we have a retracement of 22%. I also left this Fibonacci retracement to calculate a little bit where the target prices. With this low here, we were approaching this second level of retracement, 38% of Fibonacci at $70.6. But with this low here, we are basically at the third level of Fibonacci retracement, 50% at $65.84, which was basically not touched for just 5 cents, because the lower part was 65.89. But in any case, here we had a reaction, and we had a reaction based on the fact that we have this T plus 2 here that lasted 43 days, or even 44, because I have to take the last one. So 44 days out of 44, that was the last day to have a reaction, and that happened. Okay, if we now take the duration of this T plus 3 here, we have 65 days. So we have a median duration for a T plus 3. This means that we eventually can have a bounce back to the upside, but it's not excluded that we can return it further down here. As far as we do not reach 89 days, this can be a fake move. So be really careful, because time here to eventually progress to the downside and go lower this low, it's there. But we have also to have an overview of a midterm overview. And the midterm overview means that we have to gauge the total duration from this low, which is the T plus 5, until this low here that was done on the 11th of January. We have 316 bars out of 339. So the key message here is that Nextera energy has more time in a T plus 5 compared to Enphase energy and compared to First Solar. It means that there are less days to proceed to the downside compared to the other two stocks. It means that the bounce back to the upside can occur before the bounce that we can potentially have on Enphase Energy and First Solar. So you see how this methodology work and how we can cross-link the stocks that belong to the same industry, same domain, and how we can correlate the time among each other. Okay, so from this top low here, we can potentially have either a T plus 2, or because we have the entire condition to close a T plus 5, something that is more or a wider than a T plus 2. And if we have the beginning of a T plus 5, then we have to start returning to the uptrend, and eventually to have first target price close to the moving average 200. How can we know if this reaction can take place? Well, the first level to monitor is this top here. The top here is at $71.84. If we not gonna reach this top by beginning of next week, then the second checkpoint to monitor is this low. Because if we return back to this low, then we have, as I said before, more possibilities to proceed to the downtrend. And the earnings, cherry on the pie, will be released on the Friday, 24th of January. We are in an oversold situation, another indicator RSI that might be useful, but still here we need to see a reaction that for a trend reversal needs to go over $71. Otherwise, we are not gonna have a trend reversal, and we are not gonna start the beginning of a new, eventually T plus 5 yearly cycle. The T plus 2 here is confirmed, so we can remove the question mark, and gauging the total duration from this T plus 2 here, from this top to this top here, we have 44 bars, 34 bars. On this top here, we have 18 bars. So here we can update the chart, can uh, put a T plus 1 here, and eventually this top can be a T plus 2. So if that top is a T plus 2, remember that we cannot go back to the absolute tops at least for a week. Here we have 1, 2, 3 days. We need at least 7, 8 days at least. So if this is a T plus 2 confirmed, this low needs to be monitored over time, every day, because if we go lower that low, then more possibilities to the downside. Okay, but in any case, 317 days out of 339, excluding Bayerton, we have at this particular point in time less than 7% possibility to proceed to the downtrend rather than having a bounce back to the upside. So Nextera Energy has consumed more time compared to the others, and then the reversal can happen before the other two stocks. So on Brookfield Energy, despite the short-term analysis issued last episode was correct, the mid-term was rather incorrect. And here I always guarantee the total transparency. And why that? Because if you remember last analysis, I was identified this top at potentially the beginning of the T+5 upward cycle. As for the golden standard of the cycle analysis, whenever an upward or downward cycle is broken to the upside before its minimum duration, then the prosecution of the trend will be in the same direction the price has broken the top or has broken the lows. So I was expecting a return back to the tops that was at 29, roughly 28 to $29. But we started since so we have started since the 22nd of October an harsh retracement and heavy downtrend. So that that this top cannot be considered as the beginning of a T+5, but rather a T+4, because the duration of this cycle has been of 100 days. So this is a T+4, and rather the beginning of this cycle is not a T+3 or T+4, but definitely a T+5. Okay, so here I have to adjust the framing, and why this framing was difficult to find, because here with this top we had the duration until 28th of May 2024 of 260 bars, so 260 days, which is basically in line with a T+5. And eventually this T+5 could have reached 339 days, and 339 days was until 18th of September. But here we had another tail, so we had another impulse to the upside. But this impulse to the upside was not defined by a T+2, because this T+2 here basically went over after 35 bars. So this cycle, even if it's really rare, it's a T+5 hybrid cycle. And the hybrid cycles are cycles that are basically happening between two standardized grades. So a T+5 hybrid happens between a T+5 and a T+6, which is 2-year cycles. A T+4 hybrid cycle is between a T+4 and a T+5. T+3H is between a T+3 and T+4, and so on. And you have to imagine this distribution of time as a Gaussian distribution. So the more we are closer to the limits of 2.5% on the left and on the right end of the distribution, the more rare they appear. But still they appear. Therefore, here we can consider the beginning of the stop as the T+5. And this T+5 has already started pushing further down the price, and we are basically in a full development of T+5. I was also saying in the last analysis that this could have been the next move in order to develop a T+2. We had this move, and if we gauge now the total duration, we have 20 26 bars. So basically here we can put a T plus 2, and after a T plus 2, another T plus 2 took place. The second relevant top was done here on the 6th of January 2025. So here we have the beginning either of a T plus 2 or even a T plus 3. We don't have yet the time to have a T plus 3, but here we can assume that a T plus 2 / T plus 3 is in place. And therefore, this justified the further retracement. Okay. Now, if we gauge the total duration in terms of downward cycles, let's see at which point in time we are. So this is the T plus 5, and the total duration here is 328 bars. So basically, we are close to the maximum duration, even more than Nextera energy, because the maximum duration is 339 days. So once we have finished the standard days, can we continue to the downtrend? Yes, we can continue to the downtrend, because eventually we can have a bear tongue, which is a connection of a 3 degrees less between one cycle and another one. So between a T plus 5 and a T plus 5, we can have a T plus 2 that is negative. And here we can attach between 24 and 44 days extra time to proceed to the downtrend, or we can start a new cycle, which is a T plus 5 downward cycle. Okay, so we are also approaching the absolute lows here that are at $19, and here we have potentially 18. So here we have $18 and $19. So here we have even less time to proceed to the downtrend if we consider a standard duration of a T plus 5. But still be careful, because the reversal at the moment is not yet in place. It's not yet in place because we continue to fall, and if we continue to fall, then it's absolute dangerous to start or to open long position, at least for the mid and long term. Okay, we should actually have a sign of reversal. We are in an oversold situation, and the earnings release will be on the Friday 31st of January. So unfortunately here we don't have the market condition from a quantitative perspective or time perspective that can already suggest us if the earnings will be taken as a positive or negative, or if the earnings is just an excuse to drive the price either to the upside or to the downside, because here we have until the 31st of January still enough time to proceed our T plus 5 cycle. At that particular point in time, we will have 332 bars, which is not the maximum duration. So eventually they might have even time for an entire week after the earnings release to push further the price down. So here we need to be careful, because we can also expect a harsh bounce back to the upside, but still we can stay in the downtrend. So be really careful. At the moment, the market is not giving us additional information. The only thing that we know is that we are, or the only, let's say, the things that we know is that, on top of what I have just said, that we are at 4% far from the first support, that is at $19.12. But here we are also on this minor support with the candle of yesterday at $20.05. On Clearway Energy, as for the last analysis, I was expecting a little bit more push to the upside in order to complete this T plus 2. But rather than a T plus 2, here we have to consider this as a T plus 1. Why that? Because the time is not there to consider it as a T plus 2. Really simple. From this top here to this top, to the top of the 2nd of December, we add 18 bars. 18 bars is not a T plus 2, but it's rather a T plus 1. And then we had retracement. Difficult when things do not happen yet to forecast whether this cycle is a T plus 2 or a T plus 1, because we had enough days lower this top to identify it as a T plus 2. But this is the challenge that I have every time. So I accept it. And now we have to basically reframe the segmentation as this is a T plus 1 rather than a T plus 2. And of course, when things such things happen, um, you get a stop loss. As simple as this. So um, we had also enough time to have from the top that was done on the 1st of October until the 5th of November, 25 bars. So we had a T plus 2 plus a T plus 1. A T plus 2 monthly cycle and a T plus 1 bi-weekly monthly cycle gave a total duration of 44 bars. So here we can consider 44 bars as eventually a T plus 2. Okay, because um, we have the T plus 2 plus a T plus 1, but we have actually 44 days. So here I would put rather the T plus, 43 days, yes. So here we can consider the beginning of what? A T plus 2 from this top. Okay, so here we put a T plus 2. And so here analysis not correct. I always say when something is correct or not. And from this beginning of the T plus 2 here until relevant tops, we have 32 bars, or we have here 22 bars. So I would consider this top as the beginning of a T plus 2, because we are really close to go lower this low. Eventually, if this is confirmed, we will have a further indication that this is a T plus 2. But still, I put this as a question mark because we have just 3 candles. We didn't go lower this low. So here, it's something that I would rather consider it as a question mark. This low can be considered as T plus 3. And eventually this cycle has been already a negative cycle. So here we have to be careful eventually to consider further downtrend. So if this low will be broken tomorrow or on the next week, then this is the same consideration as we have done for Enphase energy. Then potentially we can proceed to the downside. But if we gauge now the total duration, because this is the key message on over the stocks that belongs to the green energy, here we have 325 bars. So we can eventually attach not a T plus 2, but a minor cycle as like a T plus 1. And here we have already all the condition to close this T plus 5, okay? And to start something new or to start a bear tongue. So we are close to the maximum duration as well. So key message here is that there are few likelihoods to there is a likelihood to continue to the downtrend, which is definitely lower compared to the likelihood to have a reversal in the short term. In the short term means by next month, as 339 candles will be over by 12th of February 2025 without considering Bayetong. If we consider Bayetong, then the reversal can happen by end of March, beginning of April. Considering the mid-term, then we have more possibilities to the uptrend rather than the downtrend. But still, over the short term, we have to be careful, eventually be prepared for other candles, red candles that will prolong the downtrend here, especially if here we have a T plus 3. The T plus 3 minimum duration is 48 days. So this would be, we already have minimum duration 51 days, but the duration will be over by the time that the new candles here that are not happening yet will be lower to this low, because otherwise we cannot close the cycle. Okay, so be careful to this swing, because this is our checkpoint. And over the really short term here, we have 7 days out of maximum 11 to close the weekly cycle. So we can have already the condition in which we can close the weekly cycle by tomorrow, and then eventually starting a bounce back to the upside. But here we have a T plus 2 that will push further down the price. So I'm expecting the beginning of next week more possibilities, at least by the beginning of next week, more possibility to the downside versus the upside. On Bloom Energy Corporation, I confirm the analysis that I have done in the last video. So here we have a T plus 5 that is definitely a positive one. We add the beginning of the T plus 4 6-month cycle here. And then after some candles spent lower the absolute top, we will return back to the tops. Okay, because we need to do what? We need to develop this T plus 4 upward cycle, and T plus 4 is 6-month cycle. So we need at least 24 bars lower that low. And in this case, we have 36 bars. So here potentially on this top, we have the beginning of a T plus 2. Is that important? Well, yes or no. It might be here or here, but we know that by the end of the T plus 4 cycle, we will return back to the absolute tops. The absolute tops is at $28.70. So yeah, it might be relevant to a certain extent, but we already can forecast the direction of the price. And the direction of the price will not be affected by the earnings release. Okay. T plus 4 downward cycle. Here we have um, here the beginning of a T plus 2 that turned into a negative one. We had a T plus 2 plus 21 bars at T plus 1. Therefore, from this low here to the low that was done on the 13th of January 2025, we have 54 bars. Here we can consider the beginning of eventually T plus 3. I say eventually because we don't have yet the number of candles that are higher this low to consider it as a T plus 3. At the moment, it's just a T plus 2, but it's fair to segment as a T plus 3 or 3 months cycle. Okay, so that's the situation we have on Bloom Energy from the closing of yesterday's candle until the top. We have a potential upside of 12%. I hope that this video has given you a lot of valuable information and insights. So if you want to be notified as soon as possible regarding our analysis as our time as a prominent value in trading and investment, feel free to subscribe to our channel and put it a like. Thanks for watching and see you to the next episode.